What is up, everyone? It's Thomas Robb with Green Boost, back here again with another video. So before, we were doing two different types of videos. One was the coffee reviews. Two was the finance videos that we just started. We're actually going to be mixing up a little bit, and going forward, it's going to be one series. It's going to be called Coffee and Finance with Thomas Robb. We're going to be combining the two. I'm going to be drinking coffee. I'm going to be talking finance. Hope you guys enjoy it. Stay tuned. So first up, let's take a look at what I'm going to be sipping on today. We got the Wandering Bear Cold Brew, coffee on the go, mocha with a splash of coconut milk. And they have 300 milligrams of caffeine. So this is going to like knock me on my ass. Or I'm going to be kind of like running around my room, which is extremely concerning because we still have the coronavirus. We're still on a shutdown or whatever we're on. We're up 300 milligrams of caffeine might be a questionable decision, but that's fine. Like, it's for the podcast. This is not a podcast. This is a video. Okay. So I've been getting a lot of questions on what should you be doing right now with your portfolio to either protect yourself from the corona scare or protect your portfolio from any sort of economic uncertainty, or two, how to profit from it. So before we start, there should be two parts to any portfolio. One is going to be your long-term, usually your investment account. So your investment account, you should not be changing anything right now. You invest for the next 40 years. You should not be changing your asset allocation because of this. You should not be changing your investments because of this. Nothing should change. What we're going to talk about is the second part of your portfolio, which I'm going to call your play account. So your play account, for some people, and depending on your own situation, will probably account for maybe 5 or 10% of your total wealth, your total portfolio. Again, this is going to be kind of like a higher risk, shorter term trade. I would say you're probably thinking, 3 to 9 months versus a long-term portfolio. You're thinking 10, 20, 40 years for retirement. So, when you're trying to play a short-term play, at least in this situation, we're trying to think which kind of businesses were most impacted by Corona. And they're very obvious, right? What's shut down right now? Restaurants. What is no one doing? No one's going on airplanes, and no one needs hotels. And fourth, everyone's concerned that they don't have money. What are they not doing? They're not gambling. With those four ideas in mind, we are going to try to put together a portfolio that should theoretically rebound as people become less concerned. Because guess what? What's not going to stop happening over the next 10, 20 years? People are still going to drink their coffee. People are still going to go fly on their airplanes. People are still going to take their vacations. And people are still going to gamble. None of those things are going away. Those are very innate human activities. And I'm very confident when the risk of coronavirus is no longer there, people will flock back to these businesses. That's what we're trying to profit from. So before we talk about any sort of investments or securities or stocks or anything like that, there's a few disclosures. One is that none of this is investment advice. All of this is for educational and informational purposes only. Two, this is not an offer to buy or sell any sort of security. Three, make sure that any sort of security that you do buy, you conduct your own research and you make sure that it fits into your risk profile and your long-term investment plan. And four, any sort of investment, you can lose your entire investment and principal, and nothing that we say on here is a guarantee. All right, so we're going to take a quick break here, and we are going to try out the cold brew because I am thirsty and I need some caffeine if we're going to be talking about stocks for the next few minutes here. Again, 300 milligrams of caffeine. Excited. It's pretty good. Yeah, so it's just a normal coffee. It's certainly much better than Variety. No offense to Variety, but this just has like a much better flavor. It's a little bit more bitter, but I think that's what people kind of go for when they're doing the micro batch cold brews here. So one sip. Everyone knows the rules. Yeah, let's go with I think we're gonna go with 7.4 on this one. 7.4. So I think I'd actually go back and try this one again. All right. First up in our Corona recovery portfolio, What does everyone stop doing when there's some sort of health panic on a global basis? They stop flying. As soon as the government tells people it's okay, people are going to start going back to airlines. So here's what I did. One of the biggest investors in airlines is actually Warren Buffett. You probably know Warren Buffett because he's one of the richest people in the world. So he actually holds stakes in 4 airlines. On March 13th, he said he wasn't selling. It was actually announced that he's buying some more shares. I think he said in Delta. I chose United because I also heard another hedge fund on CNBC talk about it. Unfortunately, I can't figure out who said that again. But the first stock that we are adding to the Corona recovery portfolio is United Airlines, ticker symbol UAL. Stock number 2 for the Corona recovery portfolio. This idea is courtesy of Bill Ackman at Pershing Square. This guy made a $27 million hedge or an investment. I think it was about a month ago. Basically, he made this investment, made 100 times his money in about a couple months, and now he's investing $2.6 billion into stocks. One of the stocks he said that he's buying is Starbucks. So, if you ask any of your friends right now, what is the thing that they are most concerned about, and is they are not able to get their Starbucks. No one is going to start changing their habits longer term. Starbucks obviously is like a drug to most people. They do have a lot of locations in China. They actually already have the experience managing through this uncertainty in China, and now they are confident they're going to be able to manage through the uncertainty in the United States as well. They're going to get a head start on people. I think they're going to be able to manage through this. I think this is a great idea to put in the portfolio. As people start spending money again, they're going to start flocking to Starbucks. All right. Stock number 3 in the portfolio, another stock that Bill Ackman said that he's investing in is Hilton. So Hilton is the global hotel chain. If the coronavirus scare goes away, people are going to start flying again. People are going to start taking trips again. They're going to be staying in hotels again. I think Hilton is a great global option for those people trying to invest in a stock that's going to benefit from a rebound in global travel industry. 4th and final stock on the list, we've got MGM. What happens when people don't have jobs, are forced to stay at home, and the state of Nevada forces you to close your casinos? You lose a lot of money. Investors get scared, and they sell your stock. One of the managers that really love this is Ricky Sandler from Eminence Capital. He thinks real buyers are stepping into the stock right now. One of the things that I love that he says is that after people are locked in with their husbands and wives for so long in this in the lockdown, people are going to be flocking to Vegas to get out of each other's hair. He thinks we're going to get through this in 3 to 6 months. A lot of hedge fund managers are saying the exact same thing. It's probably over soon. He thinks that it's going to get back to $30. Even if it's up a lot, it's still a double or triple from here. So there we go. That's the 4th stock. All right, guys. So we have the 4 stocks that we want to be investing in. Let's take a look at how they have performed since the beginning of the year. Not even from their highs from a couple months ago, since the beginning of the year, right? So we're going to look at 3 statistics here. We're going to say how much has the company fallen year to date to its low on March 18th. How much has it recovered since yesterday? And we're going to March 25th there. And then we're going to look hypothetically if the stock rebounds from where it closed yesterday, March 25th, to its prior, to where it opened at the beginning of the year, what that percentage would be, and what it looks like across the portfolio. So let's start with United Airlines. United Airlines fell 76% from the beginning of the year to March 18th. And just to remind you guys, like if you look at the actual lows of the stock, this is just where it closed. So it fell much further, but it actually rebounded before the end of the trading day. Starbucks was actually the best performing stock year to date out of these 4, right? So since the beginning of the year, Starbucks fell 37% to its low on March 18th. Hilton, 49% from the beginning of the year to March 18th. MGM, the worst of the group, fell 79% from the beginning of the year to the close on March 18th. And again, if you look at the high from, I think it was in February where they actually peaked this year, to the low, it's much, much worse. I think it's close to 85, 90%, right? So you are looking at a significant decline. So let's see, the average of those four, I'm seeing on average they declined 60% from the beginning of the year to the lows that we saw about a week ago now. So a lot of these have actually already recovered a lot. So that says two things. One, we may have missed some of the move. Two, it shows investors really believe in these stocks and are putting a lot of real money behind them as investments. So United Airlines increased 72% from its lows, or from when it closed on March 18th to yesterday, March 25th. Starbucks, 17%. Again, they fell the least, so you usually expect the smallest rebound. Hilton, 27% increase. MGM, 81% increase. Again, all of those, if you look at the absolute lows on March 18th, a lot of those have actually increased much more than that. On average, the stocks have rebounded 50% from the close on March 18th to yesterday. Now let's look at where they could potentially go. And again, this is the tricky part. These are not price targets. These are not my expectations. These are simply just like trying to structure their portfolio, give us an idea of where they could go. If United Airlines rebounds from where it closed yesterday to where it opened at the beginning of the year, there's 145% upside. Starbucks, 36%. Again, they have the smallest decline, so you expect to see the smallest increase. Hilton has a 54% increase to back where it was trading at the beginning of the year. MGM, 160% increase. Again, all of these seem, all of these seem like very aggressive. So on average, I'm seeing these stocks could double. That's probably a little aggressive, especially since there's still a lot of risk in these. There's still a lot of uncertainty in the economy. But if you think about a normal portfolio that's making, let's say 8 to 10% a year, if we can get half, if we can get a third, if we can get a quarter of these in, let's say, a 3 to 6 month timeline, you're talking about maybe a 25% increase on average. Again, these are not price targets for the stocks. They're not based on the fundamentals. They're simply based on where they're trading now versus where they were trading before, and assuming that they would get back. This assumes that they don't have any sort of permanent, there's like no permanent risk to the stock. They're not going to go bankrupt, anything like that. So that's just kind of a framework to think about. These stocks, hopefully they can, any sort of reduction in the uncertainty in the economy should allow these stocks to rebound quite significantly. Whew, that's a lot of talking about stocks. I've actually been kind of filming on and off for a couple hours here now. I don't know if the sunlight's probably different. My hair is probably a little more messed up. I don't know if I'm sitting in a different position. I don't know what it's going to look like, but I still have some of my coffee left, so I'm excited for that. I'm going to finish a little bit of this. It's pretty good. I think it's giving me way too much energy. I think I'm talking about like 3 times faster than I usually do. Hopefully everyone can still understand me. The platform that I'm using to make these investments, and yes, I actually have a portfolio of these stocks in the market. I'm going to be using this platform called M1 Finance. It's an online trading platform. If you think about free trading platforms, you always think about Robinhood. They're the most popular. M1 is a little different. It's kind of built around portfolios. I've got my M1 account open. I opened the account Monday, March 23rd. It got funded the morning of March 24th, and it bought the 4 stocks we mentioned. The portfolio has gone up 10.7% in 2 days. I would not say this is expected based on that framework that we gave before. If we expect the companies to recover to their prior highs, maybe we have another 15 to 20% or something here. Still a great performance. I originally invested $1,000. It's currently at $1,100. And you can see the slices that we did here, right? MGM, United Airlines, Starbucks, Hilton. MGM is already up 16%. United Airlines is up 14%. Starbucks 11%. Hilton is actually the worst performer, only up 1.6%. We actually have an affiliate agreement with M1. So I personally use the product. I like it. I love it. I tried it out. I think it's great. So what an affiliate program means is that at no cost to you, M1 gives me a small fee when you sign up through my link. If you want to help support the videos, if you want to help support me, I greatly appreciate it. It's greenboost.co/M1. Thank you.